This industry has absolutely changed my life. So I get very passionate about this topic. I haven't mastered many things in life, but in this craft, I have my 10,000 plus hours paid in full. So I know a thing or two when it comes to raising capital and flipping houses. My hope in this presentation is that you are able to take something away that you can implement in your business right away. Like I said, if you're a beginner or a seasoned pro. I was also a former firefighter, paramedic for 11 and a half years, top fire department in the country. I'm a very proud recipient of a life-saving unit citation bar, and it was an honor to give back to this country that took me in. So I also know a thing or two about hard work, discipline, sacrifice, and template for success. I started investing in 2008 when I was 20 years old. I had a negative net worth at that time. And I remember trying to go to a happy hour for an investor and I couldn't get in because I was underage. So a little backstory there. But I have been doing this now for 17 plus years. When I started, it took me 1.5 years to do a single deal. Within 3 years of investing, I became an accredited investor by Security Exchange Commission definition. That is $1 million plus net worth. Within 4 years, I became what is called a qualified client, which is a $2.2 million net worth. And then within 5 years, I became a qualified purchaser, which is $5 million in assets. And out of these numbers here and these bullet points, the most important thing by far is this right here. When I started, it took me 1.5 years to do a single deal. Now, imagine if I had stopped at a year or within 6 months. It doesn't matter how long it takes. You just stick with it until you do a deal. Okay? I started wholesaling. I became a licensed realtor. We covered this a little bit already. Turned rehabber, landlord, note holder, private lender, land developer, fund manager. My wife and I, we've done over 412 flips. And as I explained, that number is more than that. The highest we have managed under our portfolio was 60 properties. That's just us guys, no partners, no big syndications, nothing like that. That was not really fun. I don't want to do that again. I always thought that I wanted to scale until I did scale. And I had employees and a big team members, and it's just big headaches. And I don't want that. Our happy place now is just 50 to 75 transactions a year. No more than that. We like to enjoy life, and we like to keep the team lean and mean. That is it on my end talking about us. The point of sharing all that is not to get a pat on my back or to brag. Honestly, I could have done a lot better than I did. These results are average. You can do much better. You are not starting where I started from. So that's a plus. The point of sharing that is just to shed some light, the experience where this advice is coming from and will be coming from as we advance a lot of the deal drops. And now let's dig in to what is in store for you at Raw Deal Drop. As a business owner, after you have your methodology, your strategy, your operations, and proof of concept down, you should only focus on two things: deal flow and raising capital. We'll help you. If you don't know what methods you're going to use or what strategy, we'll do our best to narrow it down and guide you on what you should be looking for. I truly believe that knowing how to raise capital and doing great deals is a superpower. However, raising capital is not an achievement. It is an obligation and responsibility. To quote the big man, that's Spider-Man, with great power comes great responsibility. But really hear me out on this. You have to know what you are doing. This is not the time to prove your concept. You do not play with other people's money. It took us 3 years before we were confident on taking other people's money. And this is part of it, right? We're going to teach you lessons on each deal. You're not gambling. You know what I mean? So when you have the responsibility of managing other people's money, it comes with a certain weight. It is not easy. You can start with friends and family, but move away from that as soon as you can. We'll also constantly be mentioning and discussing how to avoid the 5 biggest deal killers. Biggest deal killers are: you pay too much on your acquisition, you go over budget or pre-planning pre-planning and construction. It takes too long for the rehab, project management and construction. It takes too long to sell the property, your disposition plan, your after repair value, acquisition and disposition. So we're going to be covering all of that, okay? You can raise funds for all types of deals, all types of assets, and through multiple sources and strategies. It's almost, there's so much stuff out there, guys. There's so many financial instruments that you can use to your benefit. You can raise funds for a hedge fund, anything public, stocks, bonds, currencies, commodities, and derivatives. You can raise capital for private equity, whole companies, usually buying, controlling ownership in a business. You can raise funds for debt, doing loans, lend money to businesses, projects, or individuals, and earn interest. You can raise capital for real estate, physical property, apartments, offices, warehouses, hotels, land, residential, commercial, venture capital. You can raise funds through startups, small early stage companies with big growth potential. That's just an example that we're going to be sharing a lot about real estate investing. That's just a vehicle. There are many other vehicles. And depending how the market is doing, there's a place and time for what works best on what is happening.